to our webinar. Welcome to the weekly Saturday knowledge sharing webinar organized by Mehta and Mehta. And today's topic is compliance with industry standards, minimum disclosures for related party transactions, review and approval. Friends, and with us today as a panelist, Ms. Savitri Pare. And for Savitri, I don't want to read her intro. She doesn't require any introduction. Everyone knows her. You know, for mathematics, that Gayatri Devi, someone was there, that any calculations he can do in seconds. So if you want to know in Companies Act any section, subsections, rules, sub-regulations, circular, you just ask her, it's under her tips of the tongue. And I say she's of us Companies Act. So I know if I introduce her, I will say it's not proper. You are Savitri, you can say universe of knowledge for the Companies Act and Corporates Act. You have deserved this. And friends, I never miss to mention that not only Companies Act, she is masters of lot of other laws and acts applicable to the companies. Not only Indian, international, she has worked on that forum, and I used to always fascinate with her knowledge and the exposure she was having and the delicacy which she was handling all the things. But as she rightly mentioned, she became known by the Companies Act, but friends, she is having immense knowledge and experience, and we are fortunate to have her as a panelist in our forum. And I don't want to introduce, I want to say this is enough for her. Lot of article, books, everything I don't want to mention. This is not necessary. Thanks a lot, Savitri. Welcome to our webinar. Thank you. Yeah, as a designation, yes.
Thank you.
The Company Secretary, VP Compliance of Reliance Industry Limited, very proud and big conglomerate of our country, and so for our profession. Thanks a lot, Savitri.
Thank you very much, Dipti. I'm truly humbled.
Thank you. And today, our presenter is Ms. Ashwini Inanda, our senior partner of Mehta and Mehta. She is fellow member of Company Secretary. And she is overall experience of 15 years. Started his career with Cummins, and she is also passionate about LODR, PAT, RPT. She keeps on talking that only. As and when I talk, RPT, PAT, she is also passionate with this. So both passionate today are meeting. And to add that, our own Sudhakar. And that who also is always passionate and talk about that. And we are fortunate to have with us Sudhakar. As you know, our entire this webinar, he will be passionately handling all the questions and keep on adding to the knowledge of people. With us also Mr. Bala, our moderator, who will be handling this webinar over the years. And with this, I'll say that today's topic, related party transaction, friends, is becoming more and more crucial for the compliance and governance. It's becoming kind of center point for Secretarial Department. Everyone look at the Secretarial Department for this compliance. Regulatory, stakeholder, I'll say stakeholder means everyone. And it becomes so crucial. Literally, each CS is concerned and increasing their human resources and infrastructure for compliance and for these transactions. RPT we generally refer as cannot be avoided totally. It's not always bad. It is in the interest of corporates and the growth and the business world and economy. But it should be controlled as observed because it is misutilized in past, or it should not lead to the doubt, confusion among the stakeholder. It should have, if it has transparency, more disclosure, it creates a faith, confidence in the corporate and with this, regulatory is continuously trying to standardize and give more transparency to this transaction. One of these efforts was forming this industrial forum under the aegis of stock exchange, which consisted industry forum, FICCI, CII, ASSOCHAM. This standard gives the minimum information to be given with the formats and standard to be given to audit committee and shareholder for review of RPT transaction. And with this, one also important thing is involved is certification by KMP or promoter to the audit committee, which is going to be crucial. And in turn, audit committee is giving assurance to the shareholders. Friends, we were once concerned we are certifying firms. Now it's come to other way level also. Independent directors are going to be very careful. Otherwise also they have to audit committees. Responsibility is getting more and more important. And in view of this, I lead this forum. This presentation will discuss, the panelists will discuss, and you all are there to invite the questions. I'll request Savitri to say a few words, and then Sudhakar and Bala and Ashwini can start the presentation. Over to Savitri, please.
Thank you very much, Dipti. Um, at the outset, let me mention that it's wonderful to be having these Saturday morning sessions, and it's a great way to spread knowledge, create awareness, and enhance compliance. Dipti is fully aware. Dipti and Sudhakar, they worked very closely with me in the Secretarial Standards Board, and or rather, I would say that I've had the fortune of working with both of them, and they often have heard me say that if India is able to enhance levels of governance across entities, especially by creating awareness, there's no better way to ensure that this is done. Uh, Despite there being several webinars and treatises written on several aspects of law, we still find that there are gaps. This is not because of not reading, but it's also because of the regulatory environment and the regulatory landscape, which is fast changing in India. Most importantly, because India is doing very well on the economic front, and therefore new challenges and new problems do come up. One of the most important ones is with respect to conflict of interest, which is enshrined in the law as related party transactions. As all of you are aware, that SEBI has actually postponed the implementation to 1st of July, which is just knocking. In the meantime, the working group has also been working very closely, and SEBI has also looked at the comments received from the chambers and other stakeholders. And we are waiting to see as to how exactly this shapes up. But having said that, to be having a discussion on the draft industry standards note, I would call it draft because the final one, once it is announced by SEBI, we would get to know. And as you all are aware, I'm also a part of the working group, so I will not be able to comment on it until it is out in public domain. But what I'm actually going to be speaking on today is more about the practical issues and how we are going to be geared up. It's like being prepared for the monsoons in Bombay. Similarly, let us as professionals be prepared for the new RPT regime with respect to disclosures and just look at it as a date. Thank you very much, Dipti. Thank you very much, Sudhakar. And Mr. Bala, great to be here once again with you. And over to you, Dipti and Mr. Bala and Sudhakar.
Yeah, thanks, Savitri. Over to Sudhakar, please.
Thank you, Dipti. Good morning, everyone. In fact, as Savitri has mentioned that again, some more changes are in the offing. Today morning, it so happened that a very senior company secretary called me and said that when the changes are already in the offing, why you are holding the webinar today? In fact, oh, the changes are there in the offing, but when they are going to see the daylight, we don't know. It may be before 1st of July, may not be before 1st of July. In all probability, it may not be before 1st of July. If at all it comes, or the date, again, they will extend it further. Instead of 1st July, maybe 1st August, 1st September, we don't know that also. But as on date, the way the law is, the way the regulations are, the way the ISF note is there, it is going to come into force from 1st July 2025 onwards. So we need to gear up for that. If there is any kind of postponement, it is a bonus. Otherwise, you have to implement it. Any notice you are issuing post 1st July onwards, unless until you prepare yourself, you prepare your teams for whatever the information you have to furnish, it will not be possible. So we thought that it is better to have a webinar to have the clarity about what we are supposed to do effective 1st July onwards. Second thing is that, we have mentioned last time also, we are around the time where the most of the annual reports are all getting prepared. Because of that, we have organized webinars previous webinars on BRSR reporting, notice agenda, boards report. And today we are holding this on the related party transactions, because whenever you are issuing a shareholder notice, whatever the information you have to furnish, that also we have to see. Of course, though it is not mandatory as on date, but post 1st July, whatever the notices, AGM notices are going, unless there is a change, that information is to be furnished. So that one important thing what I told, in fact, I reiterate that last time also I said that what is inevitable, earlier we used to say that there are two things which are inevitable. One is death and second one is taxes. I am going to add one more thing. The third one to that inevitable things are the amendments in the SEBI. Every time SEBI comes with some or the other amendments, around the time when we are getting neck deep into whether the organizing the AGMs or organizing the board meetings or something like that. In fact, when we were discussing about 12th December 24 amendments, I said that in the year 2024, there were three amendments were there, and previous to that, 3 years continuously, there used to be six amendments every year. This year, we are already having one amendment. So, SEBI amendments of listing regulations in particular, other amendments in general, are going to be inevitable. So, we have to be gearing up for that thing. And as far as the subject is concerned, despite the fact that what the information is to be furnished, it is there in the Companies Act under Rule 15 for the board. As such, there is no, except in the Master Circular of 11th November 2024, what the information is to be furnished to the audit committee agenda, and similarly in the shareholder agenda is not clearly there. Even in the Master Circular also, they are given the information. ISF note is going to be given the great detail. It is very much required, the reason being, it is the responsibility of approval of related party transactions have been entrusted upon the independent directors who are members of the audit committee. And they will be able to take an efficient and effective decision based on the information furnished by the management only. And most of the times, whether we like it or not, managements are always hesitate and shy of furnishing the information to the audit committee. So sometimes it so happened that the management might be thinking they are giving everything to the audit committee, but audit committee always find it deficient. And they have to probe virtually to get more information. This is what some of my friends who are as independent directors in audit committees, or whenever I go as a faculty to the Institute of Directors, what I have been told is that the amount of information what is to be furnished to the members of the audit committee is not forthcoming. That might be one of the reasons why SEBI has taken this industry standard forum and entrusted upon that responsibility to them, and then came with the ISF note. But instead of getting the things simpler and easier, they got it more complex. They made it actually so tough to understand and so tough to even remember also. They have made so many classifications like balance sheet items, P&L items, material related party transaction, transaction with promoters, transaction with promoters group, and above 1 crore, below 1 crore, whatnot. So things are very, very difficult. I think again, when the representations are gone, they're in the process of rechecking or re-examining or reviewing the things. My complaint with always with the SEBI is, before doing, why can't you see all these things? First, you said that from 1st April, now again postponed to 1st July, now again there is a change in the offing. Whenever the fraternity comes with this kind of things, sometimes it so happens the lack of seriousness will be there. If I have to read the ISF note and I have to digest that, And when I come to know something is going to be changed and the changes are coming drastically, the interest may not be there. So with this, I give a pause here and request Bala to take it forward. Thank you.
Good morning to all of you. I have great pleasure in welcoming you all for today's knowledge sharing session. This particular topic, as our earlier panelists said, this is still in the stage of discussions, and the implementation will be known only later. But however, the whole idea is, as Sudhakar puts it very clearly, there have been consultation from the ASOCAM and CII, FICCI, industry, and other people. They are all putting their head together. The whole idea is ultimately to enhance the disclosure to the audit committee in the information. Sudhakar puts it very nicely. The information is not coming to the directors and they'll have to probe into the matter. The whole purpose is only that because the SEBI has already given the responsibility of approving the related party transaction only to the independent directors of the audit committee as per the LODR regulations. The whole idea is they must have all the information relating to the related party, the transaction, the material data, and the justification, whatnot, etc. I think that is the whole purpose. Now, with all these things, as our earlier panelists said, it all become very complex. Because even the circular which has come, it is divided into A part, B part, C part, what information below, above, all those things which are all there. It is going to be very, very complex for the company secretaries to track one thing. On the other hand, equally, this is also important for the chartered accountants who are also comply with the accounting standards. Because if you read the accounting standard related to construction definition, if you read the information which is to be given, basically accounting standard talks about the disclosure, where the SEBI LODR regulation talking about the procedural, and company secretary to ensure the transparent disclosure. All the things are all very, very complex. But ultimately, in the end of the day, the company secretary has to work with the team along with the chief financial officer, auditor, and together, all the three people should come together. They should go into the detail, and so that the information what is required, the compliances which can be met. That is the thing. So here everybody has got a job to do it. Statutory auditor and internal company secretary, and above all, there is a certifying people, secretarial auditor, all the things which are actually there. It is very complex. We have a learned people in this forum, especially Savitri. I know her over 3 decades. As the people said, see the vocabulary of knowledge. Anything you ask her, it is on the fingertip. That is the knowledge she has possessed. And we are lucky that she has been actually part of her involvement with the SEBI discussion, etc., and all those things. So with their expert knowledge, we will get to know what are the things, what are the complexity, etc., and all this. With this, I ask Ashwini to take the presentation over. Over to Ashwini, please.
Yes, thank you, sir.
Friends, put the question in the chat box and you raise the hand at the end of the session. You will be allowed to speak. Okay, thank you.
I hope my screen is visible.
Yes.
Yeah, very much, very much.
Good morning, everyone, and thank you for joining today's session. We are here to discuss a significant development in corporate governance and compliance, the introduction of industry standards on related party transactions developed under SEBI's guidance. I know many of you are well versed with RPT and Regulation 23 of LODR, but what we are dealing today here is more than a regulation. It is about standardizing the approval process for RPT. Before I begin my session, I would like to intimate it is pertinent to note that there is no change in the approval process. There is only a standard that has been prescribed on how to disclose the information to the audit committee as well as to the shareholders. With this, I'll start my presentation. So as I've said earlier, it is to promote a uniform and transparent approach for RPT approval facilitated under the formation of Industry Standards Forum. It has been noted that in practice, the quality and depth of disclosures around RPTs have always been varied. Some companies provide clear, justified, data-backed justifications. However, others submit vague or cryptic notes, often just enough to tick the compliance box. To standardize this process, this industry standard forum came together, and this RPT mechanism has been, minimum information has been brought forward. Further, SEBI, wide its circular dated February 14, has also mandated to adhere to these industry standards. As we have already discussed, it is becoming applicable from 1st of July, and we'll be discussing how these disclosures have to be made. So there was a circular of SEBI on February 14, 2025, wherein it has been stated as per para 4 part A, the listed entity shall provide the audit committee with the information as specified in the industry standards on minimum information to be provided for review of the audit committee and shareholders for approval of a related party transaction while placing any proposal for review and approval of RPT. Further, para 6 of part B of the same circular states that the notice that is being sent out to the shareholders seeking approval for any RPT, in addition to the requirements under Companies Act, shall also include the information as part of the explanatory statement as specified in industry standards on minimum information to be provided for the review of audit committee and shareholders for the approval of a related party transaction. As we've discussed earlier, the RPTs have historically posed governance risks and reputational concerns due to their potential for undue influence and non-arm's length arrangements. The standardization of information requirements ensures all material aspects such as transaction value, commercial terms, comparables, promoter involvement, past defaults are transparently disclosed and formally evaluated. The purpose of these standards is to standardize the format and content of disclosures to be made in respect of RPTs to both the audit committee and shareholders. Further, it is to ensure that the disclosures are complete, clear, and in alignment with legal and regulatory requirements under LODR. Further, it is to provide information in a standardized format to the audit committee in the agenda and shareholders for material RPT and explanatory statement. If you go through the industry standards note, you will see the main aspects that have been covered in these. What is the applicability of these standards? Then the standards for definition of words and expressions used in these standards. The standards for minimum information that is to be provided to audit committee for review and approval, including the ratification. Further, format for information to be provided for review, and standards for minimum information to be provided to the shareholders for consideration of RPTs. So first we'll deal with what is the applicability of industry standards. So material RPT that has been defined under Regulation 23(1) and 1A of the LODR, 1,000 crore or 10% of the annual consolidated turnover. For them, there will be a comprehensive disclosure we will discuss in the going slides. Second is RPT, where the transaction to be entered into individually or taken together with previous transactions during a financial year exceed the threshold limits that have been given, that is 2% of the turnover as per last audited consolidated financial statements, or 2% of net worth as per the last audited consolidated financial statements of the listed entity, except in case the arithmetic value of the net worth is negative, or 5% of the average of absolute value of profit or loss after tax as per the last 3 audited consolidated financial statements. So first, it has been divided as a material RPT and other RPT. We'll discuss the disclosure mechanism. So as we discussed the material RPT as per Regulation 23(1), there is no change in the approval mechanism. Both audit committee approval as well as shareholder approval is required. Even if it is a balance sheet or a P&L item, there will be comprehensive disclosures as per para A of the industry standards note. The second part is other RPT, but which is with promoter or promoter group or person. Now, this has been defined as where there is an interest or there is 2% shareholding or more in a body corporate, or if it is a firm or entity, the promoter or the promoter group is a partner in that firm. Then in that case, this kind of RPT, if it exceeds the threshold limit, as we have discussed earlier, that is 2% of turnover, 2% of net worth, or 5% of profit and loss. If it's a balance sheet item or a P&L item, audit committee approval will be required, as well as there will be comprehensive disclosures. However, if it is less than the threshold of 2% of turnover, 2% of net worth, and 5% of profit and loss, if it is a balance sheet item, approval will go to audit committee and there will be a comprehensive disclosure. If it is a P&L item, approval will be audit committee, but disclosures would be limited. So this is the definition that has been given. Promoter or promoter group shall be deemed to be concerned or interested in any person if they in any way, whether directly or indirectly, hold more than 2% of voting rights of that body corporate, or is a promoter, managing director, manager, CEO of that body corporate, or where the person is a firm or other entity, the promoter group is a partner, owner, or member. Then the third part is the residual RPT, transactions with a related party to be taken individually or together with previous transactions during a financial year. If they exceed 1 crore, then it has to be approved by the audit committee with limited disclosures. If it is less than 1 crore, shall again be approved by audit committee, but there will be minimum disclosures. So wherever we have mentioned comprehensive disclosures, limited and minimum, we will be discussing what kind of disclosures are required. The impact of this is the classification in thresholds will determine the extent of information disclosure and the level of approval that is required. Even if a transaction is not material under Regulation 23, it will still need comprehensive disclosure if it involves promoters or exceeds financial thresholds, as we have discussed earlier. Residual RPTs, though smaller in value, will require basic disclosure and tracking for cumulative assessment. So, any comments on this?
The only thing I want to clarify is that to simplify the things and what exactly is required, what is this ISF note talks about. Two, three things I would like to say. Number one, the disclosures, what are to be given. It has been classified into three categories. One is comprehensive. Second thing is limited. The third thing is minimum. That means whatever the information which is to be furnished to the audit committee, it is to be furnished in three different ways. Number one, comprehensive means you have to give elaborate disclosures. Number two, limited disclosures means slightly lower, that is a medium, you can say. And the third one is the limited disclosures, the minimum disclosures means the basic information, whatever is to be given. The related party transactions, so what information is to be given to what sort of agenda items, where you have to give comprehensive, where you have to give limited, where you have to give minimum. That depends upon the related party transaction, which has been classified again into different categories. The first category is a material related party transaction. Obviously, considering the nature, it is a material related party transaction. Obviously, the disclosures what are to be given are comprehensive disclosures. The second type of transactions are with the promoters and promoter group. Considering the sensitivity of the promoter and promoter group, also the disclosures which are to be given are comprehensive disclosures which are to be given. Sometimes it may so happen the transaction may not be a material transaction, that transaction may not be with the promoters, but it is crossing the threshold limits. What is the threshold limits? As Ashwini has mentioned it. It is sub-regulation 4 of Regulation 30, which has given threshold limits, that is 2% of consolidated turnover, net worth, or 5% of absolute profit, average profit of previous 3 years. Those threshold limits have been brought in here. So if that transaction crossed the threshold limits, you have to give again comprehensive disclosures. If it is not crossing, you have to give limited disclosures. Then come the residual transactions. In the residual transactions also, Again, there are another two items are there. One is the balance sheet items and one is the profit and loss account item. Balance sheet item means items, the transactions which are capital in nature, and P&L item means which are revenue in nature. Again, considering the importance of that balance sheet items, you have to give comprehensive, if it is with the promoters or if it is material. So, based on the type of nature of the transaction of the related party, the amount of disclosures are to be given. And then what is comprehensive disclosure? That Ashwini is, of course, going to tell us about that. Comprehensive means what sort of information is to be given. Limited means what sort of information is to be given. Minimum means what sort of information to be given. So to simply understanding this, first and foremost thing is whenever you are preparing an agenda item, whether it is come for the audit committee or whether it is for the shareholders, this is how you have to approach the subject. Number one, you have to see that the transaction, what sort of transaction it is, a material related party with the promoter, crossing threshold, not crossing threshold, is it a residual transaction? Once you categorize the transaction, then you have to see that what sort of disclosures are to be given. Then the nature of transaction, whether it is a balance sheet item, whether it is a profit and loss account item, this is how the subject is to be approached. Once you arrive at, okay, I have to give comprehensive disclosures, or I have to give limited disclosures, or I have to give minimum disclosures, Ashwini is going to say that thing. That's how we have to approach that. In addition to that, there are some, of course, certification also is to be given, which Ashwini will tell us about. Yes, Ashwini, please go ahead.
Yes.
This is what I want. Savitri, if you want to add further to this.
So, Sudhakar, I think the approach that you've just explained is quite a good one. But actually, over here, one point which I would like to place is there are these 5 different types of items, or rather, actually, it is 6 different types which have been given in B, because B1 is the basic information with respect to the transaction as has been provided in the earlier ISN. Uh, what we need to see as compliance officials is whether these list of items are comprehensive. Are there any further items which are not covered in this list of items? To my mind, it appears to be fairly comprehensive. Having said that, what we have to see is what is the need for the disclosure. Let's also take a step back and understand as to why SEBI wanted such a detailed format to be prescribed. If you were to look at it from a regulator's perspective, it is basically because of the recent decisions that they have had to deliver. Every time there is an adverse decision, it is necessary for corporate India to brace up to see and ensure that such things are not repeated, because compliance is of paramount importance. Having said that, from a compliance perspective, should it have been just a standard disclosure across all these items? Is that what we are looking at? Would that simplify life? Probably yes. And let's wait for the final one to be presented. But let me also mention that drastically nothing is going to change. That's something which I would like to say, because what we need to understand is there is a need of the hour. What has been presented here in terms of the earlier industry standard note is 3 different types of disclosures: comprehensive, limited, minimum, which was also mentioned by Sudhakar as well as by Ashwini. Then you need to link it to the items to see which one requires comprehensive, which one requires limited. Rather than that, let's look at the items which require disclosure. All these disclosures go to audit committee. If it has to go to the shareholders, let these additional disclosures also go to the shareholders. Is that a better way to look at it? Probably yes, is what I would say. Everyone is going to agree, because there is enough complexity. Rather than putting it in terms of balance sheet and P&S item, is what several persons had written to SEBI on. Is this going to be extended, postponed, as Sudhakar initially mentioned? I would say that at this juncture, it's only an expectation. 1st of July is not very far away. Let's wait. But let us be geared. Let's not be taken unprepared. That's what is important. Over to you, Ashwini.
Thank you. So we have discussed that if there are balance sheet items and if it's a material RPT or if it's exceeding the threshold, as we have discussed earlier, there will be a comprehensive disclosure that is required. So what are these balance sheet items that we need to take care of? It has been provided in the note. It says that B3 will be loans, intercorporate deposits, or advances by listed entity or subsidiary. B4 is investment advances by listed entity or subsidiary. Then B5 guarantee, excluding performance guarantee, surety, indemnity, or comfort letter advances by listed entity or subsidiary. Borrowings, advances by listed entity or subsidiary. Sale, lease, or disposal of assets of subsidiary or of unit, division, or undertaking of listed entity, or disposal of shares of subsidiary. So if these are the items, then we will have to give a comprehensive disclosure. Further, P&L items will include sale, purchase, or supply of goods or services or any other similar business transaction, and payment of royalty. So, comprehensive disclosures, wherever mentioned, will be all disclosures as specified in para 4 of these standards as applicable to relevant RPT. In case of limited disclosures, all disclosures as specified in para 4 of these standards as applicable to the relevant RPT, except the following. That is B2 rows 13 to 17, which says about detailed comparables or benchmarks for goods or services. B3 rows 31 and 32, which talk about historical data required only for the previous year, not the last three. Then B4 is row 43, which is likely related to certain investments or disclosures. Then B8, rows 78, 79, 84, and 86, that is covering royalty payment justification and peer comparison. This ensures that materiality is respected while avoiding unnecessary compliance burden for routine items. And last is minimum disclosure. This is the baseline level required for residual transactions below threshold, that is below 1 crore. And it includes all disclosures as specified in rows A1 to A5 and B1 of para 4 of these standards as applicable to the relevant RPT. These disclosures will ensure transparency even for minor transactions, but without the need for extensive documentation or disclosure. So a minimum information, we are talking about para 4, that is the minimum information that has to be provided for audit committee for their review. The details of the related party and transactions with the related party in basic details, obviously the name of the related party, country of incorporation, and nature of business is to be given. The relationship and ownership has to be provided, relationship with the listed entity and the subsidiary, or the listed entity, subsidiaries, holding, contribution, P&L sharing in related party has to be provided. Related parties holding in the listed entity or the subsidiary, direct and indirect, has to be provided. Further, the financials of related party on a standalone basis, the turnover for the last 3 financial years, the net worth for the last 3 financial year, and net profit for the last 3 financial year has to be provided.
Yeah, 1 minute. Ashwini, please go back to the previous slide. So, in fact, recently somebody asked me one question about the related party transactions of subsidiary companies. Whether this information, what is to be given to the audit committee as per the ISF norm, whether it is to be extended to the subsidiary companies or not. To answer that question is that you again go back to regulation 23 and to the definitions. What is a related party definition? You please see that. What is a related party transaction? And after that, what sort of compliances you have to do for regulation 23? In fact, the subsidiary company transactions, which are to be placed before the audit committee of the holding company, when you are placing that, same information you have to provide it. Whatever that ISF note, as per that, whatever the information is to be provided, as if that transaction is a related party transaction of the listed entity. Savitri, would you like to throw some light on this further?
So, that's a very good question that you've raised. So, as you rightly said, it's only transactions of the subsidiary which need to go to the listed entities audit committee or shareholders, as the case may be. Let me take a step back and first start with the definition which is given in 21ZC. And I use my famous example of match the columns, which we all studied at school. On the left hand side, put the listed entity and all its subsidiaries. On the right hand side, put the related parties of the listed entity and all its subsidiaries. Remove items which are repetitive. You have the unique list of related parties for the purpose of 21ZC. If the line from the left crosses and goes to the right to any party, it's a related party transaction as per LODR, which then you need to see, does it require approval of the audit committee? The simple rule is, if the listed entity is a party, every transaction needs to go to the audit committee. If it is the subsidiaries with any party on the right hand side, where the listed entity is not a party, you have a threshold that you need to see. Is it exceeding 10% of the standalone turnover of the subsidiary company? If the answer is no, no approval is required of the audit committee of the listed entity. However, if the answer is yes, that is, if the transaction between the subsidiary of the listed entity and any related party given on the right hand side of the match the column, if it exceeds 10% of the standalone turnover of the subsidiary, you need to go to the audit committee of the listed entity and you need to comply with the minimum standards also. Over to you.
Just to add further what you said, Savitri, is that this effectively means the subsidiaries might not be listed companies, and the subsidiary company secretaries might not be fully aware of the provisions of the listing regulations. So it is the responsibility of the compliance officer, who is the company secretary of the listed entity, to also handhold the secretarial team of the subsidiary companies. He has to sensitize them, and he has to ensure that they are in sync with the listing regulations as well as the compliances, whatever they have to make. Tomorrow, he cannot take a shelter that he has not been informed by the company secretary of that particular subsidiary company, so he is not aware of that. He cannot say that thing, because at the end of the day, whether you like it or not, as a compliance officer, you are responsible, and you cannot, that all the other things might be internal to your organization. But as far as the regulator is concerned, regulator will take your board and you as a compliance officer to task. So please, you have to take the ownership of the, not only of the team of the listed entity, but also of the subsidiary companies.
Absolutely, Sudhakar. And for that matter, earlier, a person handling compliance and subsidiaries used to look at the subsidiary as a listed entity or an unlisted entity. Very often, people spoke saying, I work for an unlisted company and LODR is not applicable. LODR may not be directly applicable, but today, it is necessary for all company secretaries, whether you're working in listed or unlisted companies, to know about LODR if you are a subsidiary of a listed entity. And if you're not a subsidiary of a listed entity and not the listed entity itself, please learn about LODR, because this is something which is here to stay. And it's a very, very important piece of legislation. In the chat box, I just saw somebody has written, can you please repeat the left side and the right side? This is my favorite example, as I often say. So use a match the column example. On the left hand side, right on top, put the name of the listed entity, which is the parent listed entity. Below that, put all the names of your subsidiary companies. On the right hand side, put the names of all the related parties of the listed entity. Below that, put all the names of the related parties of each of the subsidiaries which you have put on the left hand side. If a line cuts across from left to right, you have a related party transaction as is covered under 21ZC of LODR. Hope that's clear now. Over to you, Ashwini. Thank you.
Savitri, ma'am, you have put it very, very nicely, actually. As Sudhakar also said it, people cannot be alone. I am taking care of my company. I don't know about other company. That sort of the things are not going to work. Especially the company which is having a subsidiary company, associate company, group companies, they need to create a chart. What is the parent company? What are the subsidiary company, step down subsidiary company, their associate company? They should have the complete chart in front of them. Then, as you put it rightly, the left side and right side, the match the following. That data is to be generated. That is a very perfect thing. That means the person who's actually occupying the position of the company secretary, the parent company, must know in all the probabilities what are the companies which are actually coming under the parent company, whether it is subsidiary or it is associate, or it is a group company, whatever it is, that idea he should have. And accordingly, as initially we said, actually, making awareness That means he has got the responsibility to make awareness of other subsidiary company secretaries. As you rightly said it, I am working for a unlisted company. I am not bothered about LODR. No, indirectly, you are actually governed LODR by virtue of being a subsidiary company to the listed entity. That awareness is definitely has to be created. So this is recorded. Actually, this is the job of the company secretary. That is why we said initially it is going to be very complex. Over to Ashwini, please.
Yeah. So in addition to the earlier details that we mentioned, the details of previous transactions with the related party have also to be given in the comprehensive disclosure. Further, amount of the proposed transactions, all types of transactions taken together have also to be provided in case of para 4 comprehensive disclosure. For the basic details of proposed transaction, that is the specific type of transaction, details of the proposed transaction, what is the tenure, what is the indicative date or timeline, whether any omnibus approval is being sought, or what is the value of proposed transaction, financial year wise and total, if it's a multi-year or a maximum value for omnibus approval has to be given. Further, there has to be a certificate from CEO, CFO, or any other KMP and promoter director that the related party transaction that is being entered into is not prejudicial to the interest of the shareholders, and all arm's length terms have been taken care of. Further, there has to be also a clear justification how is this RPT in the best interest of the listed entity. Further, the interest of directors, KMPs in the related party, if it exceeds 2%, has to be disclosed. In case of basic details of the proposed transaction, details of shareholding that is more than 2% in listed entity by the related parties, directors, KMPs, partners, the name and the shareholding has to be provided. Also, a copy of valuation or external report has to be placed before the audit committee, and any other relevant information as may be described. Further, for proposed transactions that are relating to the sale, purchase, or supply of goods or services of any other similar business transaction, the information related to the number of bids or the quotations received and the process followed has to be given, which is the best bid and the quotation received, the terms and price. What is the additional cost or the loss incurred by choosing related party over the best bid? The justification has to be given. If bids were not invited, why they were not invited, the reason for such deviation has to be provided, and basis for recommending the RPT as beneficial in absence of comparable bids has to be given. For proposed transactions relating to any loans, intercorporate deposits, or advances given by the listed entity, the source of funds has to be provided, which is not applicable to NBFCs or banks. But for the rest of the companies, the source of funds used have to be given. Financial indebtedness, if any, for giving the loan, deposit, or advance, the nature, the cost, tenure, other details have to be given. Material covenants of the transaction have to be provided. What is the interest rate that has been charged in the past 3 financial years to others or to the related party, and justify if the related party rate is lower. Then the rate at which related party can borrow based on credit rating standing, the credit rating standing of the related party has to be given. The rate at which the listed entity borrows based on the credit rating standing, and proposed interest rate for the RPT has to be given. For proposed transactions related to loans, intercorporate deposits, or advances given by the listed entity or its subsidiary, the repayment schedule and terms, whether it is secured or unsecured, if secured, nature of security and coverage ratio, purpose of fund utilization by the ultimate beneficiary, latest credit rating of the related party. If it is not available, then comment why it is not available. Related parties' total borrowings for the last 3 financial years, interest rates paid by related party last 3 financial years. It has to be given financial year wise, long term, short term, and justify if RPT rate is lower. For proposed transactions relating to any loans, intercorporate deposits given by listed entity, additional information is default in borrowing or guarantee invocation over last 3 financial year. The financial year-wise details have to be given along with the management justification and comments of the committee, if any. Breakup of advances, the advance given to amount, the tenure, advances as percent of total loans in prior 12 months. Further, additional details for proposed transactions relating to any investment made by the listed entity or its subsidiary, the source of funds, purpose of investment, borrowings for making such investment, material covenants, latest credit rating, expected annualized return, returns on past investments, details of asset liability mismatch post investment, and regulatory approvals disclosure have to be given. For investments by listed entity, these are all comprehensive disclosures, and as we have discussed earlier, specific disclosure will be required wherever there is any specific event, that is the loan or investment or guarantee is given, then we will have to follow the specific disclosure format that has been given. Should I go through or run?
Go ahead, Ashwin.
Additional details for proposed transaction relating to sale, lease or disposal of assets of subsidiary or of unit, division or undertaking of the listed entity. So here also number of bids, quotes received, details of bid process. If number of bids...
Ashwini, 1 minute. Bala, see that this information, what is to be furnished, if Ashwini is go on saying this, it may become monotony. Why can't you do one thing? There are a lot of questions I have seen in the chat box. So if we discuss that chat box thing, otherwise what will happen is Ashwini is go on giving that information. People will take it as a monologue, okay, that it's very difficult to remember and appreciate that also. So
sure, we'll do that.
Yeah, let us have that the questions in the chat box.
Yeah, we'll do that.
Yeah.
Let me start with the first one. The exact nature and the tenure of the proposed contribution by the relatives, whether it is the form of the loan or capital or contribution or any other arrangement, the family-owned unlisted public company as one wholly subsidiary company in the Mauritius on account of the pending project profile enhancement approval by the RBI, AD since followed the recommendation, no further remittances of the Mauritius is possible. Hence, if the sister, not the shareholder director, is one promoter come director wants to provide certain amount periodically to keep wholly owned subsidiary going, could it come under the LRS $250,000? What could be the best form of the contribution?
1 minute,
as
1 minute,
RBI
Bala. See, 1 minute, Bala. See, this is a specific question. I think, as we have informed in the webinars earlier, we don't answer specific questions like this, which is a very, very lengthy one. And I think this way we have to do it one-to-one. And it is such a lengthy question. It's very difficult to answer, and without sufficient information, if we answer it also, it may be give a wrong impression also.
Not only that, it appears to be it is relating to the RBI and approval, etc.
Yeah.
That is not exactly coming.
This is a particular specific question the participants is actually grappling with. If that is the case, then the webinar is not the right forum for that, because he may get a wrong advice or some kind, because we may not be able to appreciate the question in such a short time in a webinar like this. Yeah. Go to the next question, please.
So next one also similar to that, so I'm leaving it there.
Yeah.
In India, with reference to the legal ambit, it is said might is right. How is the compliance validity of the something preemptive measures ensure like this? Sensal engineering does not get repeated.
So I would say that, first of all, Gensol is about the funds being misused and not necessarily a related party transaction. But what is important is you need to have governance is not about having just laws. Governance is about having very robust practices which would withstand all the questions with respect to law and go much beyond. So how do we prevent? It's governance is more like a character of a human being. It not only needs to be right, it needs to be seen to be right. So build those practices, have those processes put in place. Just to add, I would say that it's a very valid question in the present scenario. From a compliance perspective, one would be grappling with it, in fact. What I would suggest is it is necessary to focus on transactions. In my view, if I were to look at governance, I would say that it's like a tripod. And as all of you would agree, a tripod can never be balanced unless all the three pieces are, all the three feet, I would say, support the top. And for that to happen, there needs to be proper coordination. Earlier, when company secretaries were only handling Companies Act in particular of 1956, one could work in a reactive way. I like the question because it refers to the term preemptive measures, which is proactive. Today, it is necessary for compliance to be proactive, to know the risk areas as to what can cause catastrophic effect for the business, and plug it in by ensuring that all those chains are coupled in a proper way, which you can do, one, by creating awareness. Is it possible for a company secretary to know all about business? Answer is no, but you should know as much about business to be raising the right questions. If you're able to raise the right questions, people who are experts in those respective areas will be able to do it. It's not necessary to know all about medicine if you're working for a pharma company, but understand the regulatory coupling which is required to be complied with. Similarly, with respect to processes, understand as to where the risk areas could be. The tripod that I was referring to, one is the structural issues, which is provided in Companies Act 2013 in terms of constitution of the board, size of the board, committees. The second is processes, which is once again given in quorum of the board meeting, quorum of audit committee meeting. How would certain major items be passed, circular resolution not being passed on certain matters? Those are processes. Third, which is a very, very important one, is on transactions. Transactions is all about day-to-day management, where one needs to understand as to where something can go wrong. The major one is with respect to related party transactions. Borrowings is another one. Checking as to whether it is within the limits or not is a very small piece. But how is borrowing being done? Is it from a related party? Is it from a non-related party? If it is from a related party, what are the guardrails that need to be there in place? Are questions which should be very clearly there. Incidentally, NAFRA has come up with a set of questions which the audit committee should be asking the auditors. Look at these set of questions; they're very, very comprehensive. They are food for thought. So I think that is the way you would be able to have preemptive measures. Don't get upset if one or two areas do not seem to be gold class. Work towards making it gold class. Because when you look at something in an as is situation, you may have gaps. How do we put processes in place? How do we create that awareness? This is, when in 2015, with respect to PIT regulations, of course, PIT was also there in 1992. But with respect to PIT regulation 2015, there were these very detailed provisions with respect to UPSI, Chinese walls, and all that. Company secretaries did look at these provisions as to how exactly it's going to be done. It was mainly done by having awareness sessions with persons who were in the know. It's a co creation. It's not something where we can say that we are the experts. You need to discuss, find out those pockets where there is a likelihood of a breach, and ensure it is properly put, proper processes put in place, proper guardrails are put in place, so that you are able to say, at least I know these 20 processes are robust.
Do we have to specifically mention?
One minute, Bala, just to add further what Savitri has said. The question what that participant has asked is how to ensure cases like Gensol engineering doesn't repeat. In fact, according to SEBI, it is the responsibility of the independent directors as well as the KMPs also to put a check on the promoters. Not like that, every promoter does this, but they may be getting tempted, especially in case of RPTs. So that point of time, the CEOs, in addition to that, on the independent directors also. Several times it happens that company secretary says, "Sir, मेरा कोई in perpetuity, you cry like that nobody listens to me, nobody allows me to comply with the law and all these things. Tomorrow, if something goes wrong, you will be questioned as a compliance officer, certainly. What is your responsibility? How you will safeguard yourself at that point of time? If I am the independent director, how I will safeguard myself at that time? Have you ever talked to the promoter on the wrong happenings in the organization? If it is so, do you have that alibi tomorrow? If that suppose investigation takes place, do you have that info that you have escalated the matter at appropriate levels and you have brought it to the notice of the board? According to me, SEBI has strengthened the hands of the compliance officer as well as the independent directors. It is up to you how much courage and conviction you are going to have and the confidence accordingly. Similarly, if I am the independent director, because when I was supposed to approve the related party transactions, I was not getting sufficient information. Now, SEBI has mandated the amount of information what is to be provided to the audit committee. So, SEBI, according to me, at its side, it is doing its best to strengthen the hands of these two people who are supposed to keep a check on the promoters. And if you are go on saying that the promoter is dominating them, then what for we are there? So it is high time for me, according to me, the CFOs, the company secretaries, the CEOs, the managing directors, and all the people who are in the management, wherever the wrong things are happening, they have to put their foot down. And they cannot take shelter anymore on saying that I am very weak and nobody listens to me. And all, if that is the case, you have to face the music. Yeah.
Do we have to specifically mention in the audit committee minutes that the RPTs have been approved by independent directors?
So RPTs have to be approved only by the independent directors is what LODR mentions. There is no specific mention of the same under Companies Act. So with respect to discussions on an RPT, you would certainly be writing in the minutes that so-and-so director, being a non-independent director, did not participate in the discussions and did not have any adverse views or did not vote against the resolution. See, now point is voting for is certainly prohibited. With respect to shareholders, there's a very specific provision which says that the shareholders who are related parties can vote against the resolution. With respect to directors, there is no similar provision. However, from good governance perspective, if you have persons who are non-independent directors on the audit committee, it will be good to mention that also, that did not have any adverse observations and did not participate in voting would be the right thing to write in the minutes.
I would say quite often one question comes that the independent directors who are members of the audit committee have to approve the related party transactions. That means that executive directors can be members of the audit committee, but they cannot approve the related party transactions. Now, the question is that recently I have been asked by one of some independent directors in one training session, do we have the right to ask the executive directors to recuse us or recuse himself in participation of that? That means, can they ask them to vacate the room? What is your view on this?
So they don't have to vacate the room. With respect to vacating the room, provisions are given only in Rule 15.2 of Chapter 12 Rules of Companies Act, which does not cover this particular situation unless the person is a related party. Having said that, can the independent directors ask the person to vacate? Answer is yes. The chairman has every right to request a member of the committee to leave the room. Recused from participation and leave the room are different. Somebody can just be sitting in the room and keeping quiet. That would be did not participate in the discussions or was asked not to participate in the discussion, but was requested to give the room to the other members for discussion is different, which the chairman has absolute right, because the chairman of the committee has the right to conduct the proceedings of the committee. He can request him to move out, or he can say that the other members will postpone the discussion on this to the end of the meeting, at which it will only be the persons who are entitled to vote who would be sitting in the room. That's also possible. The company secretary may be invited to be there in the discussion, or the company secretary may then be briefed with respect to the broad heads of the discussion. result of the discussion, company secretary should know.
Because why I asked this question is that in one of the training sessions, I have been asked by two independent directors that the presence of the executive director, though he is not a promoter, that itself is putting some kind of a pressure on the other participants in the meeting who are a part of the management. So that point of time, the independent directors, I mean the audit committee member rather, he asked that managing director that to kindly excuse us so that we can have that discussion. So the managing director asked the company secretary by whether they have that kind of a right to ask me to vacate the room. So then this question has been posed to me, and I said, rightly, you said that same thing also. Is they are within their rights and they have the prerogative wherever they feel like, because the onus is on them. They can always ask the executive director, who is a member of the audit committee, rightly excuse. Not only that, at the end of the discussions, the independent directors can ask all of the participants in the room, "Why, excuse us, let us discuss. We want to discuss among ourselves before giving our final approval." That also they can do it. Yeah. I thought it is for the benefit of the participants, these
Absolutely.
kind of questions also
No,
we might discuss.
it's a very good discussion on this particular point. My only piece of advice would be, in such a situation, if the MD has been asked to leave, whether you write it as MD was asked
Yeah.
or that the MD left the room. Between the two, the second way of writing in the minutes may sound a little better, depending on the practice of the company. But please ensure it is minuted, which
Yeah,
shows
correct. That
that
is very important.
independent decision making was made, is very clearly evident from the face of the minutes. That
Correct.
has to be very clearly brought out.
Correct.
If
Absolutely.
if a company is going to be listed, omnibus shall be taken as per the minimum standard or Companies Act.
See, if the company is going to be listed, LODR does not become applicable. It says you get 6 months to make it applicable. However, before you list the company, you're required to give a compliance certificate which says that you are fully compliant with the provisions of LODR, which is more like inducting a person. And that is a voluntary one which you are doing to get listed. So, if you're going to get listed, once you have filed your DRHP, ensure that you start going by provisions of LODR and not just say that you're going by Companies Act. Technically, you may not be in violation unless the stock exchange refuses your listing permission or goes into details later. Because when you're giving a certificate saying you are in compliance with LODR, Regulation 23 is very much a part of LODR, which is also applicable to SMEs where the paid up capital is 10 crores or net worth of 25 crores. Either of these conditions getting satisfied. Now the question is only after listing that is going to be the number. Don't go hyper technical, start compliance. Compliance is not, if not, why not on this particular point.
You rightly
Any
pointed minutes, and it's my passion, and I keep on telling minutes is that you're writing history of what action done in past by the company. No one is going to see, only that words and record will speak. One has to be very careful about minutes. Yeah, Mr. Bhatt, sorry.
any RPT needs to be disclosed as a part of the good corporate governance.
Understand the question. Any RPT needs to be disclosed as a part of good corporate governance. That whatever the disclosures are required statutorily as well as regulatorily, it is already there. You have to make the disclosures.
What about the RPT entered before the July 1st, 2025?
So the earlier ISN note, which has the implementation has been postponed. See, all that SEBI has said is implementation is postponed to 1st of July, and in that one, it had very clearly stated that everything which has been approved before 1st of April will stand protected and grandfathered. So, with respect to 1st July, we'll have to wait and watch because SEBI has to tell us, but between 1st of April and 1st of July, or rather 30th of June, if something has been done, we'll have to wait and watch, because what has been grandfathered is up to 1st of April.
With this industry standard related party definition void and somebody is sharing actually. Suppose a listed company has a public charitable trust wherein the MD and the WTD are the trustees. The listed entity takes portion of the revenue of the CSR contribution to that trust. Further, some portion of the salaries are actually apportioned on the trustee expenses, thereby increasing the profit. Request the panelist to explain whether such an amount of the expense listed company apportioned to the trust will be attract the RPT provisions.
So what is the basic transaction? I've understood as to the related party angle, which is not clearly covered under Companies Act, but is covered under para 9 of Ind AS 24. But what is the underlying transaction? Is it CSR contribution or what is it?
They are saying actually certain portion of the revenue as CSR contribution to the trust.
Okay, so from the accounting standards perspective, there are two views. One is that anything which is given as CSR contribution is not considered as a transaction because it has to be a commercial transaction, is one view. Second is a conservative view. If you take it as a transaction, then yes, you need to comply with the requirements, although you are required to have, for that matter, under 135, it says Section 8 company which has been promoted by the company. If it has been promoted by the company, it may not be a wholly owned subsidiary, maybe a wholly owned subsidiary. If it is a wholly owned subsidiary, it's completely exempted. But if it is not a wholly owned subsidiary, yes, with respect to these kind of transactions, there would be an issue. If it's a trust, yes, from Ind AS perspective, it will become a related party and, err on the side of caution. Better to give the disclosures.
If the net worth is actually negative, then the threshold are not applicable. Therefore, no approval required under the listing regulations, but approvals required under the Companies Act. Please clarify.
Where does it come out that if the net worth is negative, LODR thresholds are not applicable? If you are taking 10% of 0 is 0, then even 1 rupee requires approval. Actually, under LODR, there has been no clarification that if the net worth is negative, then 1,000 crore will apply as material related party transaction. And that's exactly where the fear is. Even 1 rupee appears to be a material RPT. Then the question is up to 1 crore, since omnibus is permitted, does it mean that if it does not exceed 1 crore, you don't need to go to the shareholders? So I think these questions come up. It's not about Companies Act and LODR. If net worth is negative, you do need to require approval. LODR is very much applicable.
Sorry to ask the query, since this is not the part of the today's topic. Whether the second audit report of a listed company can be issued anytime after 1st of April 2025, or it has to be compulsorily issued on the date of which the board approves the board report.
If there is a qualification in the secretarial auditor's report, it requires to be covered in the board's report. If the board's report has already been approved, the train has left the station. Where is the scope for the secretarial audit report to have the qualification? And hence, it is necessary that the secretarial audit report is on the same date as that of the board report. Let's say there is an observation or qualification that needs to be addressed in the board's report.
If the trust is a related party, if the sponsor is a listed company.
I think there's some problem in Sudhakar, are you able to hear?
Yeah,
Yes, a trust is the related party if the sponsor is a listed company.
Right. No, we were not able to hear you. You'll have to repeat the question.
Yeah. The question is trust a related party if the sponsorer is a listed company?
What you have to examine is para 9 of Ind AS, under which the term same group has been used, which is very wide. And under that, a trust will also get covered. Under
So
Companies
trust
Act, there is no specific reference. But in LODR, in Ind AS 24, this will get covered. Para 9A and 9B, you will have to specifically examine under which it gets covered.
So under index,
Will,
it
it was, will the investment of the mutual fund, which is a trust, considered as a related party transaction?
So there is specifically exemption with respect to investment in mutual funds. This question has been coming up repeatedly in the recent past because of PIT regulations covering mutual funds. But under LODR, investment in units of mutual fund is not included. So therefore, it will not be included.
I think Jambunathan Mallikarjun, one of the senior company secretaries, saying, just to my view, I am not sure SEBI has actually provided any regulatory guidance in the audit committee members on determining arm's length price. This is important focusing.
So actually,
focusing a balance on the long-term impact to the company.
See, arm's length price, yes, that's correct. That in LODR, there is no specific guidance which has been provided. However, this is a very dynamic business term. For example, under transfer pricing rules with respect to income tax, they have given these 6 methods which are very commonly used. And most importantly, the cup method, margin method, these are all very, very commonly used to justify that it's on arm's length basis. Or you have the Customs Act also. So GST also has reference to related party transactions. So arm's length, can you have a very clearly defined definition? I would say one would have to see. For that matter, if you refer to Companies Act, the term used is not arm's length price. The term used is arm's length basis, which basically means the terms and conditions have to be considered as a bundle of rights which go with everything. And therefore, arm's length is something which is dynamic, but depending on the transaction, you can determine as to what will be considered as arm's length. That's for company to company to be finalizing. And in fact, you should have a chart as to what are the basic terms of kinds of transactions, what are the broad terms, what would you consider as falling within arm's length, not falling within arm's length. So, you need to have that thin imaginary line and what would permit you to bring it inside and what will actually be one where it will not be able to come inside and has to be treated as a transaction outside. Like say, for example, the easiest one is price, because anything which is quantitative gets very easily defined. But let's take one which is credit period. You have a lower price being given by a related party, but a very short credit period, or maybe on 2 days credit, while someone else is willing to give you 90 days credit. You will need to load on the interest cost that the entity is paying to be able to see whether reasonably it's on arm's length or not. So I would say it's a bit of a dynamic one, which is the reason the various parameters will have to be considered and also the nature of transaction.
Please explain the inclusion of the comfort letter.
So why has it been included? I would not comment on it. But if comfort letter, see what has happened is over the last few years, comfort letter is a term which has been used. But what needs to be seen is there a liability? Because the definition of related party transaction under LODR uses a very, very important phrase where it says whether price is charged or not, which means whether there is any monetary element or not, it remains a related party transaction. At that juncture, comfort letter also becomes a related party transaction. But if there's no price charged, then it will not move to the next one, which is material related party transaction.
I think Jambunathan is also sharing his thought. Moreover, organization will have to reconfigure MIS system, including subsidiaries, build robustness and to provide the requested information, data submission to the audit committee and the shareholders for effective approval and direct disclosure. That's what he said actually.
Absolutely right. See, systems, processes, automation, workflow, these have all become terms which, company secretaries are very, very familiar with today and need to be very, very familiar with.
I think left side to right side, you already explained, somebody has asked this question. SEBI regulation 15 to 25 is not applicable to SME companies. Even formation of audit committee is not required. Shall the circular shall be applicable to the listed SME companies?
So regulation 15 to 27 is not applicable. That's absolutely right. However, the proviso to the same provision in the same breath also says that effective 1st of April 2025, Regulation 23 will be applicable, which means RPT provisions are applicable. So you don't need to have an audit committee, that's correct. Regulation 18 is not applicable, but 23 is applicable, which means you need to take it to the board if you don't have an audit committee, is what I would say. Because you do have, the other way of looking at it is, if 23 is applicable, you need to have an audit committee, get it approved by the audit committee, and you don't have to take it to the board if it is one which does not require board approval. But let's assume an SME has a material related party transaction, you would then require board recommendation before it goes to the shareholders. So if you don't have an audit committee, fine, but you need to take it to the board. A better thing would be, if you're an SME which is required to comply with 23, then it is better to have both. Having said that, the threshold, if you are a SME with a paid up capital exceeding 10 crore or net worth exceeding 25 crores, it's actually 10 or above, 25 or above, then 23 is applicable. So, which basically means the basic provisions of LODR not being applicable of 1025 is also extended to SMEs. So, conclusion, SME, if your paid up capital is less than 10 crores or net worth is less than 25 crore, LODR is not applicable. If it is 10 or above or 25 net worth, 25 or above, then you are required to comply with 23, while other provisions of LODR from 15 to 27 and 17 to 27 are not applicable.
I think, Bala, you can give a pause here as far as the questions are concerned. Let Ashwini complete her presentation because it is already 12:20. Let her complete the remaining presentation and then we will take up the questions further.
Sure.
Ashwini, you can go ahead with your presentation.
Okay, sir. So we have seen the different disclosures that were required under comprehensive disclosure. Further, standards for minimum information to be provided to audit committee for review and approval. All disclosures must be submitted in the format as prescribed under these standards. Each field should be duly filled with appropriate information, comments, or declarations. For transaction-based fields, comments must be added explaining relevance or rationale. If a field is not applicable, you have to indicate not applicable. If no comment is provided, indicate nil to ensure clarity. The audit committee should also be provided with supporting documents and information like valuation or other external reports, if any. If the audited financials of the related party are unavailable, certified financial details certified by related party shall be submitted instead. And whether related party follows a different financial year, this shall be explicitly disclosed in the submission. The following certifications will also be submitted with every RPT proposal from the CEO, CFO, or any KMP of the listed entity, and from the director, who is also a promoter, if any, of the listed entity. What will the certificate confirm? The certificate will confirm the RPTs to be entered into are not prejudicial to the interest of the public shareholders, and the terms and conditions of the RPT are not unfavorable to the listed entity compared to the terms and conditions had similar transaction been entered with an unrelated party. However, if any promoter director does not provide such certificate, the same shall be informed to the audit committee and the shareholders if it is a material RPT. Disclosure for royalty management fees and industry peer comparison. If a transaction involves royalty or a management fees or service fees, each component must be clearly identified and disclosed separately. This helps in understanding the nature and payment of each payment. Minimum peer comparison for royalty payments, the listed entity must strive to compare its payment terms with at least 3 industry peers wherever feasible to assess fairness. The selection of peers must follow this order. Prefer Indian listed industry peers. If unavailable, use listed global peers. If neither is feasible, refer to the research analyst peer set used by SEBI registered analysts. Explaining the peer differences. If the listed entity's business model is not comparable with any analyst peer set, it should provide a brief explanation highlighting the difference. If only one or two peers are available for comparison, the entity must clearly disclose this limitation along with efforts made to identify suitable peers. Next is the standards for minimum information to be provided to the shareholders for consideration of RPTs. The purpose of disclosure to shareholder, the explanatory statement in the shareholder notice must provide sufficient information to help shareholders evaluate whether the terms of the related party are favorable to the listed entity. The information included must, as far as applicable, match the format provided to the audit committee, that is para 4 of the standards, ensuring transparency and consistency. Redaction of sensitive information. The audit committee is allowed to approve approve redactions of commercial secrets from shareholder disclosures. However, they must certify that such redactions do not impair the ability of public shareholders to make an informed decision. Further, a justification for the transaction has to be given, which must include a clear explanation of why the transaction is in the interest of the listed entity, a statement of assessment by the audit committee that the audit committee has reviewed all relevant disclosures and is satisfied promoters will not benefit at the expense of shareholder has to be given. And certificate review disclosure, it must be stated that the audit committee has reviewed the certificates which have been submitted by the CEO, CFO, KMP and promoter director as required under the standards. Further, any valuation or expert reports or external assessments are relied upon by the audit committee while approving the RPT, copies of the same have to be disclosed to the shareholders. And the bid process disclosures, wherever applicable, have to be given by the audit committee. Further, the board and the audit committee comments, any comments, if any, have been made by the board or audit committee should also be included to aid the shareholder to make a better decision. Any other relevant information, the notice shall also include any additional material information that could influence the shareholder's assessment of the transaction. So action points are that you have to classify the RPTs against the new thresholds. Firstly, you have to classify them into three parts. One is the material RPT under Regulation 23(1)(1)(a). Then promoter linked transactions exceeding the 2 to 5 thresholds we discussed earlier. And then becomes the residual RPTs, which is greater than 1 crore aggregate annually. We have to maintain an RPT tracker, track cumulative transaction value for each party, include running total to trigger thresholds in real time, update the audit committee formats using the para 4 format of industry standards, include the CFO, CEO, promoter certificates and valuation wherever applicable. Standardize the shareholder disclosure, insert complete para 4 information in explanatory statements and for material RPTs, and certify non-prejudicial nature and arm's length terms for each disclosure. Further, there has to be a template or an SOP which gives the checklist for classification, disclosure and approval. There has to be a pre-designed format for minutes, valuation report, peer comparisons. The agenda templates have to be revised, clearly identify the category, whether it is a material RPT or a promoter linked RPT or residual RPT. Specify the disclosure level, which is a minimum, limited or comprehensive. We have to train the internal teams. We have to conduct training for the legal, finance, secretarial and business units to make them understand what are these disclosures and the formats that have been given in the industry standard note. Then focus should be on the thresholds, the disclosure formats, certification requirement, and the timeline. Further, there has to be a timely collation of all the past RPT values, transaction details and terms, related party financials, valuation and comparison reports. There has to be a peer benchmarking, whereas where you will have to collect Indian global peer data for royalty and service transactions. You have to engage SEBI registered analysts if required for the benchmarking purpose. For record keeping and audit, there has to be a certified copy of internal financials if audited financial is not available, certifications from the CEO, CFO, promoter director, valuation expert reports, and committee meeting minutes. With this, I come to an end to the presentation. We can take the question.
Okay. Before you take up further questions, I would like to say, because the participants now start drifting. So, as you all know, that there is a guidance note on related party transactions, and SSB board is in the process of revising that RPT. And in the month of June, Chartered Secretary, there is an announcement requesting any kind of questions or any kind of issues relating to RPTs right to the institute, so that the same will be suitably addressed in the revised guidance note on the related party transactions. So we also take this opportunity that in case any of the participants are having any questions, either you can write to the institute directly to the given address, or you can also send it to us, so that we will compile those questions together with the questions which we have received here today. We will forward it to the institute. Both myself and Savitri, coincidentally, we are the members of the Secretarial Standard Board, and we will ensure that suitably all these questions are addressed in the revised guidance note. Thank you. Yes, Bala, please take up.
Sudhakar, I also like to express my sincere, appreciation for the entire secretarial board, which has brought out the excellent guidance notes and RPT. It is not only the RPT guidance note which helps to the professionals, but even the regulator has been quite often referring the guidance notes in every order what they are actually passing, pointing out what is the secretarial auditor is expected to do, what is the guidance note provided, what is the things, etc., and all this thing. From that point of view also, it becomes very, very important, as you rightly said, again, at the cost of the repetition, all the people who are concerned, who are in the practice, whatever they are experiencing, whatever the problem, etc., they can put it so that second audit, they have the expert mind, they can apply their mind, they can bring out a better note than what is existing today with reference to the components. Thank you.
Then you can stop sharing your screen.
Savitri,
Yes,
somebody is smiling, complimenting to you about your Mehta column. Finally, it becomes very helpful. That's what somebody has given you the compliment. Whether 2/2, 5% threshold applicable to the RPT, where listed entity is not a party.
So where the listed entity is not a party, we would be going by 10% of the subsidiaries turnover as the threshold for it to go to the audit committee. Let's assume it goes to the audit committee, then the disclosure standards become applicable, and you then need to see as to where it fits in. So don't start with 2% as the threshold, because 2% as the threshold is one which is applicable to the listed entity only. Having said that, I would actually take a step back and say, let's approach it as related party. The complexity of 2 to 5, or the complexity of minimum disclosure, limited disclosure, comprehensive disclosure, let's keep that aside and look at it purely as disclosure. So is it a related party transaction? Is it one which requires disclosure? And then look at the segregation as may be applicable.
In a private limited committees, if RPT, which is not an arm's length basis and not ordinary business, can the board resolution be passed through the resolution by circulation?
Point number one, is this a listed company? Of course, resolution by circulation is not covered under LODR. However, I'm just asking this. Point number two, when you're saying it is a private company and there is a related party transaction, what is the nature of transaction? Is it one which is covered under section 188? If it is not, is it merely a transaction with a related party or a related party transaction? If it is merely a transaction with a related party, let me give an example. If it is one of giving of loan, it's not covered under 188, but being a transaction with a related party, you will require approval of the audit committee. Can such a resolution be passed by the audit committee by circulation? Since it is not covered under 188, there will be no bar in passing such a resolution by circulation. But let me add now, if it is one where the company is going to give a loan, it will automatically get covered under 186, in which case the company has to pass a board resolution, which can only be passed at a meeting. If you are going to do a meeting of the board, do a meeting of the audit committee in this case. But technically answering your question, for giving of loan, can audit committee pass it by circulation? Since that is not covered under 188, answer is yes.
Does this applicable to the 100% wholly owned subsidiary company in a foreign country, which is actually itself has another 5 step down subsidiaries to 5 different countries governed by those countries' law?
Fine. So all these are wholly owned subsidiaries, then they are clearly covered under 23(5) of LODR.
For certificate from the promoter, director and KMP, can interested promoter, director certify the RPT?
So can an interested director, see, basically the promoter is certifying, saying that this is not something which is to further his interest. The purpose is something different. What they are trying to say is the purpose is conflict of interest getting cleared in this particular certificate. Is it one which is in the interest of the listed entity, or is it one which is in the interest of the related party and not in the interest of the listed entity? See, nobody can say that all related party transactions are painted in black and are bad. But if they are not in the interest of the listed entity, it should be called out. Independent directors need to raise their voice. That's exactly what the spirit behind it.
Any view on how do we identify the entities in which the P and PG group has interest?
Once again, go back to the basic drawing board. And P and PG has interest. P and PG are related parties. And P and PG having interest, it takes it to one where it's a related party and then there is interest. And interest, even in the earlier one, it says that interest is with respect to control. So you need to see whether they are controlling or not. Look at their annual return. You will get to know if they are in control, they would be shown as the promoters of those entities, or there would be something to show. See their Bento of those other entities. You will get the details. But yeah, do you need to do all
And
this?
you are
Depends on
filing
the
and
question.
you are filing the shareholding pattern on quarterly basis. There also it is there.
What is SO and CE rating?
Sorry, what is it? What is?
Yes, SO and CE rating. I think he's talking about the rating of the debts. I think structural obligations and the credit enhancement. I think that's what he's
That's
talking about.
correct.
I think
That's correct.
that's what I think he's talking. SO and CE.
Absolutely right. That's right.
Whether the audit committee approval of the whole holding listed company is required for RPT between the 2 subsidiary companies, where one subsidiary does not exceed the threshold limit of 10% of its annual shareholder turnover, but the other subsidiary exceeds the 10% threshold of its annual standardization turnover.
So definitely the listed entity will have to take permission, because the 2 subsidiaries are like the 2 eyes. Only if both of them are seeing well, you don't require any approval. One of them has 10%, exceeding 10%, you need to go to the audit committee of the listed entity.
If the goods are sold by the holding company to its overseas wholly owned subsidiary company for the further supply of the customers in a wholly owned subsidiary company, do you have to take audit committee approval, or it is exempted as per the exemption given under Regulation 23?
Sorry, this is a transaction between 2 wholly owned subsidiaries. It will be exempted. Did I miss something?
If the group is sold to holding company to its overseas wholly owned subsidiary only he is talking. But only thing is overseas wholly owned subsidiary. Whatever it is, wholly owned subsidiary only is talking.
No problem. Because the term subsidiary is not specifically defined in LODR. It therefore goes back to Companies Act. Under Companies Act, you have 2 subsection 87, 1 and 2. And if it is a subsidiary as per Companies Act, and Companies Act in the 3rd explanation very clearly says overseas bodies corporate will also be covered. So therefore, if it's a subsidiary and 2 wholly owned subsidiaries, It's exempted. For that matter,
If in
wholly
ca-
owned subsidiary is not an explained term, but I would say that use the principle of folding up. Once it folds up, does the 100% go to the holding company? If the answer is yes, it is so.
It is says that holding company is selling to wholly owned subsidiary overseas.
Fine.
That-
If in case of the unlisted partnership firm, same process we need to follow?
Unlisted partnership firm.
Hmm.
If it is a partnership
Partnership
firm,
firm get listed.
no,
Unlisted partnership firm. But where is the question of partnership listing? I don't
there's
get
no.
it.
That's what I say. Where is the question of partnership firm getting listed?
Yeah, that is right. That
Maybe
is
they
right.
want to know I'm registered.
Maybe unregistered he may be referring, I think.
So registration is not compulsory under Section 69 of the Partnership Act. If the question probably is that if it is not an LLP and one governed under Partnership Act, which is not registered under the Partnership Act, overcomplication exempted, overcomplication explained. But having said that, you would need to see who are the partners of this partnership firm. Let's say the listed entity and its wholly owned subsidiaries are the two partners of the partnership firm, then it will once again enjoy the benefit. So you need to see as to whether it is enjoying the benefit or not. Let's assume it is a related party because some other party is having, let's say, 20% partnership interest. It will then become a related party and you need to comply with all these requirements.
Material transaction definition, is it 10% threshold or 2% threshold? Please clarify the same.
Material related party transaction is one which is very clearly defined in 23.1 read with 23.4 of LODR. It is 10% of consolidated turnover or 1,000 crores, whichever is lower. That is the material RPT threshold. What you saw with respect to classification of RPT is different from material RPT. Material RPT continues to be the same.
Is approval of the audit committee required for the transaction entered by the listed company with a wholly owned subsidiary company in the ordinary course of the business and at arm's length? Again,
Under
we are talking
LODR,
about
no. Under Companies Act, please check section 177, where in the exemption in 177.44, they have put a proviso where they say unless it is covered in section 188. Covered in section 188, there are two interpretations. One is if it is covered in 188.1 in the types of transactions, some companies take approval, few other companies say no. 188.1 should be read as one which is not in the ordinary course of business or not an arm's length basis. Only then will we take it to the audit committee.
someone is asking a question. I want to hear something on a greenwashing of the advances, deposit, loans, and investments.
Well, that is, if the question is in the context of a related party who's not been able to repay the earlier loans and you're doing greenwashing just to show repayment of the earlier loan and you're continually doing it, what you need to see is it an exact amount or is it a higher amount? If it is a higher amount, every time you're going to be showing a higher amount, then you need to see whether it is becoming a material related party transaction. If it is becoming a material RPT, you will also need to ensure that credit rating of that other related party is very clearly disclosed to the shareholders. So, this is absolutely a very, very good area where you need to see, are you only supporting where you know that the money is never going to come back to you? So, when you're talking in terms of greenwashing of loans, that's the fear. It's good money chasing bad money, and the chase goes on. So, that's one where you need to raise a red flag.
Whether the remuneration or sitting fees paid by the listed entity to the subsidiary to its directors, key managerial personnel, or its senior management, who are also promoter, shall abide by this standard.
So this is, the recent amendment to LODR very clearly exempts sitting fees, commission paid to directors who are not promoters of the company or KMPs. So payment of any remuneration to a director who's a key managerial personnel, that is managing director, whole-time director or promoter, will need to go to the audit committee. Others need not go to the audit committee because they have been brought out from the definition of related party transaction.
Whether it is mandatory to give a certificate from the KMP promoter director to all the related party transactions.
So right now, as per the ISF, yes.
Our listed entity has 10 subsidiary company, and the transaction BW listed entity between the listed entity and the shareholding are material RPT. So do we have to provide a minimum and additional details for each transaction? If yes, then please suggest a manner of disclosure.
So the formats have been given. If it is material related party transaction, the details have to be given. Wait for 1st of July or a circular from SEBI in this regard. Yes, you will need to comply with respect to the transactions. And as B2 very clearly says, each of those transactions details need to be given separately.
Whistleblower mechanism to be imbibed by CS and auditors, etc. Somebody is putting a question.
Yeah, of course, it
Why
covers
can't
all.
we take up only related questions to the this thing
Yeah.
and look at why to answer all the other questions?
Yeah.
And let us focus upon the.
This is effective for transaction after July 1st to 2025. What if the transaction entered on June 30th, 2025?
It comes into the new circular comes into effect. I mean, as per the SEBI circular, the ISN has been the industry standard note has been made effective only from 1st of July. So before 1st of July, the circular is not applicable.
Section 177, subsection 7 of the Companies Act states that KMB shall not vote in the audit committee when it considers the audit committee. Can we draw the inferences that MD WTD being a KMB should not be member of the audit committee?
So that's, if you look at it from a listed company perspective, independent directors, if you have only of independent directors, then you don't have any of these conflicts at all. If you have independent directors and other non-independent directors, then what happens is you need to have majority of independent directors. So, while an audit committee can comprise of only 3 directors with 2 independent directors and 1 non-independent, for quorum, you will require both the independent directors to be there. If you want to have your executive directors to be members of the audit committee, then you actually are looking at a size of 3 or probably a size of 5. If you're going to a size of 5 with 3 independent directors and 2 non-independent directors, you're actually just making the size of the audit committee pretty large, of course, depending on the board size. So should we not have is dependent on the size of your audit committee. Because if you have only 2 independent directors on your audit committee, you're going to be dependent on both of them being present at the audit committee meeting to form quorum. Otherwise, your audit committee meeting does not happen. If it's a listed company, one of the directors has some major emergency and he's not able to attend, and you have already intimated the stock exchange saying your board is going to consider the financial results on XYZ date. If this happens on that day, how are you going to be handling this particular matter? You can't postpone the board meeting. You can't have this audit committee meeting. So these are complexities from a practical perspective which you need to approach and then handle the issue of size of your audit committee and size of your board.
Is the fixing of the remuneration of the MD WTD of the subsidiary listed company, who is also executive director in the listed company, need to be approved by the audit committee?
Once again, remuneration of the whole-time directors of the subsidiary, as per section 196, will be done by the subsidiary concerned. If that figure exceeds 10% of the turnover, standalone turnover of the subsidiary, only then does it need to go to the holdco. Otherwise, it does not need to go unless the person is a promoter. That's what you need to see.
Karthik Srinivasan saying, as per the ICAA, ASC trust also need to be consolidated, and hence whether approval may be required.
Answer is yes. As I mentioned a little while ago, trust as per para 9 of Ind AS 24 will be a related party, and therefore you will need to take approval, because LODR refers to related parties as per Companies Act and related parties as per Ind AS.
In case of the private limited company, which is the wholly owned foreign company, and any RPT transaction which is not ordinary business, not on all-the basis, can we pass the board resolution through the circulation of shareholder approval should also be taken in this case or not? Please advise.
wholly owned subsidiary, no issues under LODR. With respect to Companies Act, I just answered this question a little while ago with respect to transaction with wholly owned subsidiaries.
What about the AIF investment? Is that also not covered?
AIF, going by mutual fund provision, I would say AIF is also probably not covered, but I would pause over here. I'm not an expert on AIF. Sudhakar, if you have done some studies, please chip in.
The only thing is, I could see another 65 questions in the chat box, Bala. If we are going to read every question religiously like this, I don't think we will be able to do justice. My suggestion is that this particular webinar is on industry standard forum note. I haven't seen any questions on that. I have seen the questions pertaining to RPT only. We had a masterclass on RPT, and there are 6 webinar series we have organized. And I request the participants, if we want more about these kind of RPT related questionnaire, kindly go through those what's called as webinar recordings. You will be able to appreciate that. So now I request Bala that please use your discretion, which are the questions which you have to take up instead of reading every question, because there are 65 questions still on the chat box and we have 10 minutes left.
Okay. Then let me avoid this RPT related question. Let me come back to the industry standard.
Any significant RPT question is there interesting one, you may. Otherwise, routine, there is no point.
Okay.
And actually, you can have another webinar to address if there are 65 questions. That itself is going to take 1.5 hours.
Savitri,
No, see,
RPT is
now
a
suppose.
evergreen topic.
No,
Anytime,
not see that Deepti. What I am trying to say, if there is a question like this, is all RPT transactions need board approval? This is a very fundamental question according to me. Okay, so these questions we have already addressed in the past. Because every RPT, this thing, we cannot answer the same questions again and again. I request the participant to kindly go through those 6 webinars, wherein we have discussed, threadbare, what is an ordinary course of business, what is arm's length. All these questions, they are addressed very clearly there. Otherwise, what happens is, because now we have to push the questions, 10 minutes, 65 questions, rapid fire, not possible.
Does this disclosure form part of the minutes, or it can be placed in a meeting as an annexure?
It has to see the details that you have given to the directors, forms part of agenda. So, otherwise it can be an annexure, but it cannot just be placed at the meeting. Because, if you're just placing it at the meeting, the committee members, audit committee members have to give their consent for shorter notice with respect to these particular items, for placing the items as notes to agenda at short notice. As per secretarial standards, you require consent of the audit committee members. Otherwise, they will not agree. And for that matter, at the meeting of the independent directors, they may raise this point also, because they are supposed to be commenting as to whether the flow of information is proper. So, audit committee requires these information well in advance. So, if you're just going to be placing it at the table, it's difficult.
Actually, it is defeating the purpose.
Yeah.
Placing it on the table means it is defeating the purpose altogether.
True.
Okay. In case of the prevailing limited company, which is the wholly owned subsidiary company, RPT transaction, which is not ordinary business arms. No, I won't take this question.
So why don't we specifically ask if there are one or two more questions on the industry standard note? If not, we could actually close over here, because with 4 minutes to go, it's now a stage of 2 rapid fires.
all are RPT related only.
Now, 1 minute. Let me just go through it quickly. No, I don't think anything is industry standard. Everything is only relating to the RPT things, etc. Only another thing.
Anyway, say that the good part of it is, Bala, is that, in fact, as I told, we are in the process of revising the guidance note. A lot of questions have come up. I will compile all these questions and we'll give it to the ICSI. And wherever the issues are not addressed already in the guidance note, we will address those issues. If they are already covered, it is fine enough anyway.
1 minute. From Amit, there is for this standard only. Approval of audit committee was taken in February 2025 meeting for complete financial year 25-26. Now, if the industry standard become applicable from July 1, whether the company is required to take approval of the audit committee again for the remaining period from July 25 to March 26.
So since the approval was taken before 1st of April, the FAQ which was issued by SEBI very clearly says this will be exempted. So, it will not be required to comply with the earlier industry standard note. So let's wait for SEBI to make their announcement. Until then, we certainly can take a stand that it is exempted.
Yeah, I think that was only relevant to that standard. Anyone who raised the hands, now we can ask them to speak and raise the questions themselves. So,
Rahul has risen the hand. Rahul, you can speak. Anita Ghosh is also risen the hand. Any one of you can unmute, you can speak, please.
Or they are raised by mistake.
Rahul, you are there? Anita Ghosh, you are there? If you are there, you can unmute yourself, you can speak.
But only relevant to the today's topic, huh?
Yeah. Are you there, Rahul?
I think by mistake they have done.
Okay, Anita Ghosh, because I can see only this two. Both the hands are risen.
Yeah.
Okay. No response. I don't think any other people have risen the hand. Yeah.
Okay, then we can close this session. And one question came, what happens? No. It is again RPT. Okay. Thanks everyone. Thanks Savitri for rapid fire question, rapid fire answer. Thanks Aswini for wonderful presentation. People are appreciating the same. Thanks Sudhakar, as usual.
Thank you, Savitri. Thank you.
Thank you.
Sorry, I was just muted. I was in the other call also. Yeah.
Savitri ma'am, there are lot of appreciation, lot of thanks, which has actually come physically. I really enjoyed your session, specifically with your quick answering, referring, giving the things, etc., practicability. Thanks a lot once again. I'm definitely looking forward to meet you personally at Bombay.
Thank you very much. I very humbly fold my hands and I thank you all for enriching my understanding and knowledge. It's really been wonderful. Thank you very much.
Thank you.
Thank you.
Thank you, Sudhakar. Thank you, Bala. Thank you, Dipti.
Thank you, Sudhakar ji. Thank you.
Thanks a lot to everybody. Let us meet yet another session. Thank you, Atul, for coming for the closing the session.
Yeah. Okay, sir. Thank you.
Bye.